All right, good morning, or good afternoon. Thank you guys so much for tuning into today's video. Today, I'm going to be covering what are higher time frame objectives and how do I incorporate them into my trading strategy. So to begin, I do want to talk about what the definition of higher time frames objectives are, right? So they are essentially why prices moves in the first place. So there are four reasons here. It is to generate liquidity, to take liquidity, to rebalance inefficiencies, and to retrace back into premium and discount. I got this idea from ICT, but more specifically, Justin Marlin. He was the first person that broke it down into very, very simple terms, um, such as these four right here. So, to begin with, understanding what higher time frame objectives are, I do want to note that prices are fractal, right? The way that I approach prices is that every single time frame, the daily time frame, the weekly time frame, the 4 hour time frame, every one of those candles, they have a specific objective in mind, right? And you have to incorporate lower time frames with higher time frames to be able to get a probable trade strategy on, right? So this is like an example of how I trade kind of here. So higher time frame, as like I said, is relative. It higher time frame could be on any time frame, but you have to be able to understand the storyline, right? So let's say you're trading with the let's say your higher time frame in this case is the hourly time frame. You have to go from the hourly time frame onto the 15-minute time frame to the 1 minute time frame, something like that. But you can't go from the 1 hour time frame straight or the 1 hour time frame higher time frame objective straight into the 1 minute. There's no correlation, right? That's like reading chapter 1 and skipping all the way to chapter 50. You're missing a lot of information. And like you can apply this to the weekly time frame as well. So let's say the weekly candle is suggesting higher prices, right? And you want to align yourself with the weekly time frame. So you can go from the weekly time frame onto the daily time frame onto the 4 hour time frame. So weekly candle, daily candle, and then 4 hour entry pattern. And using the lower time frames, they allow you to find trade entries, right? They don't. I mean, you. I guess you can use them for like I said, time frames are relative. So the whole purpose of using the lower time frames is to be able to allow you to have a precise entry, and it needs to be in alignment with the higher time frame order flow. So if your higher time frame order flow here on the hourly time frame is higher prices, your entry pattern should be suggesting higher prices. Your 15-minute model should be suggesting higher prices as well. So have that time frame, have those time frames in alignment with one another, right? And like I said, to kind of get a better understanding of what I mean by why prices moves here. So generate liquidity, take liquidity, rebalance inefficiencies, and to retrace back into premium and discount. I have made some slides or I guess trade reviews of the different examples, right? So first, I do want to start off with taking liquidity. So taking liquidity is basically known as expanding. So the first one I do want to go over here is expanding. I'll use this example here. So take a look at this 30-minute candle here, right? So like I said, higher time frames are relative. My higher time frame in this specific trade is the 30-minute time frame. It could be the 4 hour time frame. It could be the daily time frame. What I mean by higher time frame is that you're able to find a time frame If you're able to find a lower time frame relative to that specific time frame, then the first initial time frame could be treated as a higher time frame, a reason why prices moves in the first place, right? So in this specific example, like I said, I am using the 30-minute time frame as my higher time frame order flow. So this 30-minute candle here, I can anticipate for the 30-minute candle's low to be taken, right? It's a pretty bearish 30-minute candle. The next 30-minute candle, I would anticipate for the 30-minute candle, the next 30-minute candle to take out the previous 30-minute candle's low. So with that, I have an understanding like, okay, I want to see lower prices for the next 30 minutes, and not only the next 30 minutes, but the next hour. So here, the hourly candle here is also suggesting lower prices as well. So the hourly low is the same low as the 30-minute low. So that means we can anticipate for us to complete the the hourly objective within the next 30 minutes. So for us to align with this specific time frame, the hourly time frame, I go on to the 15-minute time frame, right? So notice how here, this hourly candle, the way that it closed is bearish, right? But I want to, so pay attention to this candle. That candle right there. So notice how this candle right here isn't exactly suggesting lower prices. It's like, I guess retail could call it doji candle. But notice how that candle suggests is like either way. It could be either up or down. I'm not confident in the direction that prices wants to move based on this candle right here. So the time frames at that specific, or those two time frames, the 15-minute time frame and the hourly time frame, they aren't exactly in alignment with each other, right? The 15-minute time frame is suggesting like consolidation, or just, it's not really suggesting a idea. It's just doji candle, right? But the hourly time frame is suggesting lower prices. So I wait until the next 15-minute candle gets created, right? So here, the way that this 15-minute candle now closed, the next one, it creates a pretty bearish 15-minute candle closure. And I can anticipate for us to take out the next, I can anticipate for the next 15-minute candle to take out the previous 15-minute candle's low. So this candle's low here would be my model's objective, and my higher time frame, like I said, is the hourly time frame / 30-minute time frame. So now that I have a higher time frame objective, I have a model, I would go on to my entry pattern. So my entry pattern here is a 2-minute fair value gap. It's a gap that could be retraced back into. Once we retrace back inside that 2-minute fair value gap, I take my I take my trade, I sell there. I'm targeting the 15-minute low / 30-minute low. So that's expansion. That's kind of known as expansion model, right? Because notice how the 15-minute low is completely separate from the 30-minute low. We should expand lower towards the 30-minute / hourly low after we take out the 15-minute low. So that is known as taking liquidity, expanding towards existing liquidity already, right? And that's just one of the higher time frame objectives. And just one of the reasons why prices move is to expand towards existing liquidity. The second one here, rebalance inefficiencies. So to rebalance a inefficiency is when, so if you trade ICT, right? I'm sure you have came across fair value gaps. So, and fair value gaps are essentially inefficiencies in price action. And a tendency in price is that we tend to rebalance that inefficiency. So if we know that one of the tendencies in price is that they like to rebalance inefficiencies, so why not use that as a objective, right? So in this case here, in this trade, notice how we create this 30-minute fair value gap, right? From this candle swing high to this candle's low, right? There's a gap in price. And with the way that we are closing here on this 30-minute time frame, I can anticipate for us to rebalance this inefficiency. I can anticipate for prices to trade into that 30-minute fair value gap. So that means I have a reason. There's a reason why prices should continue lower here in this case. So that's my higher time frame objective, right? And more specifically, this is on the 30-minute time frame, but fair value gaps are created on every single time frame, right? Notice here, there's a hourly fair value gap that's about to be created here today, right? Fair value gaps are existent in every single time frame, meaning that you can apply the fair value gap trade, I guess, or fair value gap higher time frame objective to every single time frame. And now that I have a higher time frame objective in this specific trade, I have to find a model to align myself with that objective. This 15-minute candle here, it's suggesting lower prices as well. So notice how the 15-minute time frame is in alignment with the 30-minute time frame. That's time frame alignment. That's understanding how to use different time frames in collaboration with one another. So that's essentially another idea of, or that's another component of higher time frame objectives, right? Or just essentially why prices moves in the first place. And the last thing here is prices likes to retrace back into premium and discount. So if you're let's say you sell shoes, right? Do you want to be selling shoes at a high price, or do you want to be selling shoes to your customers at a low price? If you want to make a high profit, you want to be selling where prices are considered high, right? You want to be selling at higher prices to make your profit margin larger. So if you apply that concept to the stock market, you can actually find opportunities. And here is an example of premium and discount here. So this trade here is based on the hourly time frame, more specifically the 4-hour time frame. So we have a dealing range here. So from this 4-hour swing high to this, 4-hour swing low to this 4-hour swing high, there is a dealing range, right? And in a dealing range, we have premium and discount. Like I said, there's going to be an area where that, if you guys can see that blue line right here, that's essentially equilibrium. And equilibrium separates discount and premium. If we are sellers here, if I want to be a seller in the market, is it optimal for us to be selling in premium? Yes, but I'm going to target discount here, right? If we're going to, we can use reverse psychology here in this case. If we know that there are buyers in the markets, right? They're going to want to be a buyer in premium. So that makes sense for me to short into premium, right? So in this specific trade setup here, the 4-hour time frame, like I said, the 4-hour time frame is suggesting for us to continue lower. And why else should we be continuing lower after taking out the 4-hour low? To retrace back into the discount of the 4-hour dealing range. So now that I have a higher time frame objective, I just have to find a model. And my model here is going to be on the hourly time frame, right? The hourly candle here is suggesting lower prices. I want to see us take out the hourly low. After we take out the hourly low, we should retrace, continue lower to retrace back into the discount of the 4-hour dealing range. Those are essentially the 3 reasons why I take trades, right? Those are like the 3 objectives. And like I said, I'm able to find trades throughout the day, because of the idea that prices are fractal. If I were to stick onto one time frame, then I would limit myself to that specific time frame, and I'm not really broadening my horizons here. And I do want to go over a trade setup that I'm possibly going to take here. So let's take a look. If we are looking at this 3-day candle, which we just created here, at the end of today. Notice how it is a bullish candle, right? I can anticipate for this, for the next 3-day candle to take out this candle's high. So I can anticipate for the next 3-day candle to be a open, low, high, and then close. I want to see us take out the 3-day high. So that would be my higher time frame objective, right? If I can find myself a trade model on the lower time frames to align myself with this 3-day objective, then I have myself a trade. So now that I have an idea, right? So I'm gonna actually make this a green line just so I can indicate and show you guys that that's my higher time frame objective. So going into the daily time frame, I notice, hey, the daily candle here is suggesting higher prices as well, right? I can anticipate for the next day for us to take out the daily high. So notice how the daily time frame is now in alignment with the 3-day time frame. So I have a higher time frame objective, which is the 3-day high. I have a model, and my model's objective is to take out the daily high. Now all I need is an entry pattern. And to align myself with the daily model, I go onto the 4-hour time frame, the 6-hour time frame, the 8-hour time frame, or the 10-hour time frame, right? I'm not skipping over any pages here. I understand the full story. If I went from the 3-day time frame to the daily time frame to the 1-minute time frame, that's completely out of that doesn't correlate, right? Going from the daily time frame to the 1-minute time frame, like I said, is like skipping over 50 chapters. You go from chapter 1 to chapter 50. You missed out on 49 chapters worth of information. And that's not something that you want to do, right? So in this case right now, like I said, I have my higher time frame objective. I have a model. Now all I need is an entry pattern. And notice there is this 10-hour fair value gap that we are creating here. And this fair value gap is better known as a BISI, buy side imbalance, sell side inefficiency. It's suggesting higher prices. It supports the idea of higher prices, right? Not only did we create this 10-hour fair value gap, but we also disrespected this 8-hour SIBI. So this should now turn into an inversion fair value gap right here. So this should be treated as inversion. And yeah, that's essentially higher time frame objectives. Just a little bit rushed. But I'm going to be creating a separate video going over every single one of these expansion trades, every single one of these rebalance trades, and every single one of these equilibrium trades. But just keep in mind, there are 4 reasons why prices moves. To generate liquidity, which is basically consolidation. You don't want to be in trades whenever prices are consolidating. The second, to take liquidity, which is expanding towards existing liquidity, right? To rebalance inefficiencies, to trade back into fair value gaps. And the fourth is to retrace back into premium and discount. And with that, that's going to be all for today's video. Thank you guys so much for tuning in. And until next time, be safe.